Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 5th, 2025, and we're diving into ChargePoint's third quarter fiscal year 2026 earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. ChargePoint, a leader in electric vehicle charging solutions, has just released its Q3 FY2026 results, and there's a lot to unpack, from revenue growth to strategic initiatives.
Revenue and profitability overview. Let's start with the top line. ChargePoint reported a revenue of $105.7 million for Q3 FY2026, marking a 6% increase year over year. John, can you elaborate on the factors driving this growth?
Absolutely. The revenue growth was primarily driven by a 15% increase in subscription revenue, which reached $42 million. This indicates a strong demand for ChargePoint's network charging systems and subscription services. Additionally, the company achieved a GAAP gross margin of 31% and a record non-GAAP gross margin of 33%, reflecting improved operational efficiencies and a higher contribution from subscription revenues.
Debt reduction and financial health. ChargePoint has also made significant strides in strengthening its financial position. Can you tell us more about their debt reduction and overall financial health?
ChargePoint successfully reduced its debt by $172 million, which is more than 50% of its total outstanding debt. This move significantly bolsters their balance sheet. As of the end of October, they had $180.9 million in cash and cash equivalents. Moreover, their operating expenses decreased by 16% year over year, and the net loss narrowed to $52.5 million, a 32% improvement from the previous year.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $2.15 for ChargePoint, but the actual EPS came in at $2.23. How should investors interpret this miss?
While the EPS was slightly below expectations by 0.08 cents, it's important to consider the broader context. ChargePoint is in a growth phase, focusing on expanding its market presence and reducing debt. The slight miss on EPS doesn't overshadow the positive strides in revenue growth and operational efficiencies.
Strategic initiatives and future outlook. ChargePoint has been active on the strategic front as well. Can you discuss their recent initiatives and what they mean for the future?
ChargePoint launched the new ChargePoint platform, a next-generation software solution that enhances real-time insights and customer responsiveness. Their partnership with Eaton is also noteworthy, as it positions them to accelerate growth in the e-mobility sector. Looking ahead, ChargePoint has provided a revenue guidance of $100 million to $110 million for Q4, and they've secured a Sourcewell contract to supply EV solutions to public agencies in the US and Canada.
Key takeaways. In summary, ChargePoint has demonstrated solid revenue growth and significant debt reduction, although they missed the EPS forecast slightly. Their strategic initiatives and partnerships are setting a strong foundation for future growth. John, any final thoughts?
ChargePoint is on a promising path with its focus on innovation and financial health. Investors should keep an eye on their execution of strategic plans and market expansion efforts.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on ChargePoint's performance in the comments below.